For decades, the housing market has been driven by one simple force: more people. More people meant more households. More households meant more demands for homes. But what happens when that stops? Right now, we're entering an era where birth rates are falling, immigration is slowing, and even technology like AI is changing how and where people work. Put that all together, and the long-term demand for housing may look completely different than what we've known for the past 50 years. In this video, I'll break down how collapsing birth rates, anti-immigration trends, and the workforce changes could reshape real estate demand, what this means for future buyers and investors, and why some parts of the market could end up oversupplied with falling prices while others stay strong. Hey everyone, I'm Asha Benjamin. I'm a loan officer with Nexa Mortgage, and it is my job to help buyers and homeowners make smart financial decisions, not just today, but with their eye on a bigger picture. And this is one of those big picture topics that matters more than people realize. We're always focused on things like interest rates, inventory, but demographics, the people who will actually buy homes, that's the foundation of the housing demand. So let's zoom out a little bit and take a look at where we're headed. First, let's set the stage. Globally, the fertility rates have been falling for decades. In the US, the average woman in the 1960s had around 3.6 children. Today, it's closer to 1.6. That's well below what's called the replacement rate of 2.1, the level needed to keep a population stable. And it's not just America. Nearly every developed nation is below replacement level. Countries like Japan, South Korea, Italy, and Spain are at historically low fertility rates. Traditionally, the US balanced this with immigration. More people moving in meant more households, more demand, more housing growth. But in recent years, immigration has slowed, and anti-immigration policies in many countries are tightening that flow even more. At the same time, global institutions like the United Nations and the World Bank project that the world's population will peak sometime mid-century and then start declining. That means the growth engine that fueled housing for generations could actually reverse. So why does this matter? Because housing isn't just about buildings, it's about people. If fewer people are born today, that means fewer first-time home buyers in 25 to 30 years from now. An aging population means more retirees downsizing or passing homes on to their heirs, which increases supply without really creating new demand. Slower immigration means fewer new households forming in the US, and household formation is the #1 driver of housing need. And on top of that, AI and automation are already changing the job market. Some sectors are shrinking, some are relocating, and that affects where people live and whether they feel confident enough in their income to buy a home. Put all of this together, and we're looking at a future where housing demand may not keep up with supply, something that hasn't really been true in America for many, many decades. So what does this mean in the meantime? In the short term, demand is still strong. Millennials are the largest generation in US history, and they're in peak buying years. That's why inventory still feels pretty tight today. But in the long term, it's a different story. As fertility rates stay low and boomers eventually downsize or pass on their homes, we could see oversupply in some markets. Prices in certain regions may stagnate or fall, not because the economy collapsed, but because there are simply not enough buyers to absorb the available homes. On the flip side, demand will remain strong in markets with immigration, job growth, and younger populations. Urban hubs, college towns, and areas attracting international workers may hold value better than rural regions with aging populations. We don't have to guess what this might look like. We can already see it. Take Japan. Its population has been shrinking for years, and the result is ghost towns and homes left vacant in rural areas. You can literally buy a house in some Japanese towns for the price of a used car because demand has collapsed. In Europe, countries like Italy and Spain are facing similar trends. Fertility is so low that their housing markets are increasingly divided. Urban cores stay expensive, but rural areas, they're hollowing out. And in the US, while we're still younger compared to Europe and Japan, our fertility rate is trending in the same direction. If immigration doesn't balance that out, we could be heading down a similar road in the coming decades. So what do you do with this information if you're buying or investing? For buyers, focus on areas with strong job markets, universities, or immigration, places that will still attract people even if the national trend is downward. For investors, be cautious about putting long-term money into regions with shrinking or aging populations. Rental demand may weaken if young people leave, and home values may stagnate without new buyers. Also, consider that future generations may not prioritize ownership the way past generations did. Renting could become a default for many young households, meaning rental strategies may actually be more stable than betting on constant appreciation. Key takeaway: demographics are destiny. Follow where the people are going, not just where the homes are cheapest today. So here's the bottom line. For the last century, US housing market has been fueled by population growth. More people meant more demand. But in the 21st century, things look different. Falling fertility, slowing immigration, and an aging population could gradually shift us from a world of housing shortages to one of oversupply. Doesn't mean prices are going to crash tomorrow, but it does mean we need to think long-term about where demand will actually exist. If you're thinking about buying or investing, don't just look at today's rates or prices. Look at the demographics, because the interest rates change, but people, or lack thereof, those are what truly drives the housing market. If you want to talk about how this might affect your buying or investing strategy, reach out. I'd love to walk you through it. And if you found this information helpful, please don't forget to subscribe, like, and turn on notifications, because every week I break down the biggest shifts in housing, mortgages, and the economy, so that way you can make smart decisions with confidence. Well, thanks for watching. That's all I've got for today, and I'll see you in the next video.